Hello, everyone, and welcome to our interview with Scott Jensen. We got myself and Chris Carsley, and I want to welcome Scott. Welcome to our show, so to say, and we really look forward to diving in with you today and talk about all the various stuff around how you do business and how you approach real estate and giving people advice on wealth management.
Welcome, Scott.
Great. Well, let's start off with a couple of questions here, just to kind of get people to know you a little bit. Where did you go to school?
Well, and so my path into this was a little bit unique compared to other folks I've met with here. So I went the military route straight out of high school, and so I did some time in the Marine Corps as a reservist straight out of high school, and so that did form a bit of what I would do with my career later, and so going after that was done. I went to school, just a local school here in Minnesota, and really I wasn't real picky with schools. I was looking to study finance, right? I knew I wanted to get into financial planning, to be an advisor. So I was looking for somewhere with a good finance program. I was hoping that it'd be somewhere that's affordable. I was fairly anti-debt in my younger years. And then I wanted to be able to work and go to school and kind of bootstrap it the best I could. And so I just went to a local school, Metropolitan State here in St. Paul, Minnesota, where I'm from. And that was great. The nice thing about a school like that is that most of the professors also work in the industry. And so you've got a good basis of academics, as well as you've got professors who have real world experience. And then also the classmates, being that they were also adults for the most part, going back to school, had work experience in their field. So you could get people where the classroom discussion was very interesting and helpful, and a lot of personalities and perspectives other than just the professors.
Nice.
That's great. I remember one of my own professors in business school. The best one I had was really just a guy that had that real world experience, and he was a professor on the side. And those are the best, because you really can ask those questions and you get more than an academic or a book answer to things. So totally relate to you, and I think I can totally understand too why you would take that attempt to do a no debt route. The amount of debt that students come out with now, it's just unbelievable. I used to hear about it with doctors, but now just even normal students coming out with a liberal arts degree and wondering how in the world they're going to pay that back. It's just it's quite amazing to me. So where do you live now? And tell us a little bit more about why you love living there.
Sure, and so I am up in Minnesota, the northern part of the country here, and I do enjoy it for the most part. And so I'm born and raised in Minnesota. I've left the state for vacation, and I left the state while I was in the military.
So you do any of those outdoor stuff?
And so I enjoy Minnesota for the most part. Minnesota it's got its extreme seasons, and so we're known for cold, snowy winters, and then there's hot, humid summers, and really all of the seasons are just very intense. And so like our fall has just beautiful fall colors, and the spring is very green. And
They're already started in hockey, of course.
Variety that Minnesota has. And then the business community, the professional community around the Twin Cities is fantastic. I love that. And then up once you get to the northern part of the state, there's just beautiful rivers and lakes.
Now,
and very
you
outdoorsy
mentioned a little bit with
forests
your
and
education
hiking
about
and
wanting to
kayaking
do
and
something
canoeing and
around
all that sort of
finance.
stuff.
What got you
That's
started
great.
down that
So
road as an
that's why I'm
RIA?
here. Sure, and so my early path, I was a huge Dave Ramsey guy, right? I remember listening to Dave Ramsey, and we personally used his system for a long time, and I just thought it was the coolest thing that here's this guy making millions of dollars, helping millions of people be on a better path financially, right? And just what a great way to make money. And so I was thinking of that and kind of exploring careers where you could do that, right? Help people do better financially and then do well financially, the same thing, right? And looking at different options, it seemed like being a financial advisor would be the best for me. I've got a very analytical just mindset. I usually boil things down to the numbers, but then understand the emotional side of things. And really take an approach that's just trying to help the client. And so, yeah, that's the main reason that I started doing this. And so right out of college, I got a job with a financial planning firm here in Minneapolis. A really good firm focused on retirement planning and working with retirees, because it's one thing to save for retirement, right? Like if you've got a long enough time horizon, it's pretty simple. And that's an oversimplification, of course. But it's much more simple than it is once you're close to retirement and or in retirement looking to develop income from your portfolio. That's when really things become complicated. And so we specialized in that.
Interesting. I'm sure Chris will dive into that later with that statement about the difficulties of that. So what made you move on to establish your own firm independently?
Right, and so as a financial advisor working with a good firm in Minneapolis, things were going well, but I've always been entrepreneurial, just ever since I was a kid, right? Just always this entrepreneurial mindset, wanting to start a business or grow a business. That was always fascinating or interesting to me. And so that always was kind of in the back of my mind. And then going through the '08 crash, and then after that with real estate prices going up and buying our first house, that was our first taste of real estate and how that could impact you, and seeing the effects of sweat equity and really putting time and money into your house and seeing how that worked. And so we did that, and then once we bought our second house, we turned our first one into a rental property. Very simple, easy way to get into rental real estate. And that worked really well for us, and so we did that again. Well, we didn't move, but we bought another house actually on an auction, turned that one into a rental property, put a tenant in there. Very hands-on managing, and it just was always enjoyable to us and went well. And during that process, we were getting more involved with the financial or with the real estate investing community within the Twin Cities. One of the great things about the Twin Cities area is the investor community is just fantastic. Very welcoming and just a helpful group. It's not a group where it seems like people are real tight or they're real kind of cliquey. Like people are just very welcoming. And so getting involved with that group, I kept having people coming up to me, asking for help with things or asking to work with me on various things. But really the firm that I was working with just wasn't set up to help this type of investor. And most planning firms aren't, right? And so most firms, they just get paid for your stock market investments, and then that creates a bit of a conflict of interest there. And not that you can't work around that, but the firm I was at in particular, it just didn't seem like the best fit. And so with my background and the interest in real estate and experience in real estate, as well as financial planning, it seemed like a natural fit to go out on my own and create a firm that just specializes in working with active real estate investors. And so I did that. Most of my clients now own active properties, right? And so they're either managing the properties themselves, or they've hired a property manager and they're managing the property manager. But they're almost all, reporting Schedule E income as active real estate investors. And so having that especially has been fantastic.
That's amazing, Scott. For everybody to know, a little background here is Scott is someone I met on Bigger Pockets. So I was particularly attracted to talk to Scott because there's so few RIAs that do anything other than just your standard public market stuff. And so when you run across a unicorn in some sense, like Scott, you become like, wow, I want to talk to this guy. Who's this guy that actually thinks different than 99% of the other wealth management people out there? And that's not necessarily a knock on it. Maybe Chris, you can dive into more of the background, et cetera, that kind of causes that. But that's one reason it was just great to be able to reach out to Scott and find out, hey, here's this person who is really built a great business around being a little different in the marketplace and helping his clients. And with that,
yeah, I mean,
Chris,
you're totally right. I mean, most of your RIAs and actually most of your investors, as we've had in other conversations, alternative investments, which real estate is one of them, is really not for everybody. It may not be, but the thing is to have someone who has that access to the client and can actually work out some of those unique particulars of their client and say, hey, something in real estate might be useful to you. Scott, if you've got a chance, if you can give us an example of, what particular clients you're running into that are looking at this alternative investment within specifically real estate that meshes well with their portfolio. What type of client, were they, income, they're looking for diversified portfolio, a mix. If you can give us an example of that, because that is an important aspect that, I think a lot of people don't utilize some alternative investment platforms simply because, well, they don't have time, we're too busy, I've got too many clients, I don't feel like any of my clients may need anything outside of traditional investments. There's multiple reasons why it wouldn't work, but I think there is a vast number of people that just don't have the education or the background to say, well, wait a second, I really feel comfortable suggesting this and building this into potentially my my clients' portfolios. Which, I mean, Scott, sounds like you kind of did a little bit of your own work and deployed your own knowledge base then to help other people expand their investment portfolio. So if you have an example of and walk us through some of the clients that you work with and how it's really fit for them, that'd be great.
Yeah, and so my clients are fairly diverse, but I think and there is a difference between passive investing, and I don't even include real estate in this passive investing. Real estate's passive from a tax perspective, but in actuality, you've either got to manage the property and the tenant and the building and all of that, or you've got to manage the property manager. In this type of investing, other than you can go to the investing in REITs or DSTs or other instruments that are actually passive. But most of my clients are active real estate investors, and I'd say active real estate investors are the ones who are either purchasing the property or finding someone to purchase the property for you, and then managing themselves or managing the property manager. And so this type of person is typically business minded, right? And they're not a person that's satisfied with only a W-2 income. Variable income does not mind, or this person doesn't mind having variable income, right? And so they don't need the security of a W-2 job most of the time. They enjoy real estate, right? And I think and the more wealth you accumulate, I think you learn to gravitate towards things that you enjoy doing. And so if you don't enjoy real estate, I don't think real estate investing is probably the thing you should do. And you enjoy the actual process of looking for properties, buying properties, and that sort of thing. Understanding construction is a good bonus. Understanding finance and the numbers is a good bonus. But I don't think that active real estate investing is for everybody. It's nice in that it's not a complicated small business, right? And so it's a small business that most people can start. If you have some capital, you can buy a property, you can find a tenant and put the tenant in the property. Doing it well can be complicated, but in theory, it's an easy, low barrier to entry business to start. And so it's a good spot that if you put forth some effort, you can gain above market returns because you're doing real work and it's an actual small business. And so a few examples that I've worked with. I've got a client now where one of the things we're doing is he's got his investment portfolio and he's got his real estate portfolio. Real estate makes up about 75% of his investments. He's got a significant amount of smaller, and I'd say smaller, like 1 to 4 unit buildings, either single family, duplex, triplex, and several fourplex buildings. And so he was looking at it, and he no longer has a W-2 job. He's just living solely off of his real estate income for the most part. But he says, or his main goal was he wants the cash flow from real estate to do significantly better than inflation. And so just looking at that, he wanted to increase his passive income by 50% over the next kind of the shortest time frame possible. And so just looking at doing this, you've got a few options. We can either supplement this with other investments, either stocks or bonds or alternatives. We could change how he's leveraging things, and or we could buy more properties. And so looking through things, it seems like the best path for him is going to be to do leveraging a little bit differently, to get some longer term low interest rate mortgages and buy a few more properties. And doing that should increase his passive income and his returns overall significantly over the next few years. And so it's people that oftentimes want oversight. They want somebody to come in with kind of an outside third-party opinion and say, how do you think my properties are doing? What could I do differently or better? Or it's somebody who has some sort of goal in mind. How do I reach this goal? A lot of times it's passive income. Sometimes it's like a legacy goal. What's the best way to pass this to children? Sometimes it's the tax planning aspect. Real estate has a lot of tax benefits, with depreciation, but there's also depreciation recapture and planning for that. It's a huge.
Do many of your clients do many of your clients go after and sort of think about the diversification nature? I mean, how important is that? Are you finding that with, specifically to real estate and looking at, you got a brand new client that maybe doesn't have any real estate and wants to get into it? I mean, is that, I'm always curious that it's varied what people are really after. Some just want the income and they don't really think about risk controls aspects and the diversification. Is that something that you're finding more and more people want from real estate, or is it, no, it's something I'm just really interested in, I want the alternative income?
So it's very, I'd say people are very much on a spectrum here. And sometimes you get people where they understand that they're very overweight in one particular asset class. And maybe things like if you're very heavily weighted in some city and then some local regulation makes it hard for you as a landlord, something like that makes it, appear that you're very much concentrated in one area, and maybe that's not as good as you had hoped. And so for some clients, diversification is a major thing why they come to me. They've done very well in real estate, and they want to know how to kind of spread their eggs out, not have all their eggs in one basket. Other clients, I'm pushing more for diversification, and they don't see the risk as much. A lot of times with my clients in particular, I think a lot of people are attracted to real estate because there's a sense of control, right? And so if something happens, they can sell the property, they can get rid of the tenant, they can refinance. They've got some options, whereas with stocks and bonds and a lot of alternatives even, you are at more of a the whims of the market, right? In which it's.
Speaking of that,
I want to jump in for a moment,
go ahead.
if you don't mind, Chris.
Yeah.
Scott said something really interesting that you and I had talked about picking a first alternative investment. And what advice do you give? Scott said, look, it's something that you enjoy. And we think that key aspect, people will ask us, well, from that, there's so many different alternative assets out there. The list is usually long. And we pick. Our advice to people when you're looking at first alternative assets, pick something you think you'll enjoy. So it's great to hear that you're seeing out there something where people picking real estate, staying with it, because it is something that dived into and are starting to enjoy. And as we all know, look, the best subjects in school were the ones that you you had fun with and you enjoyed. And I think it's no different when you pick an alternative asset. Is really to pick one you enjoy, and that makes learning so much easier. What have you found around that? Have you found people about much easier as clients when they really enjoy real estate or really enjoy that alternative investment? Or is that something that you really suggest to people? Is pick something you enjoy?
Yeah, definitely. And I think you hit the nail on the head. You just do better at the things that you enjoy doing. So I mean, most clients that come to me already are real estate investors, and if they're not, I do have a discussion with them on real estate investing and the pros and cons of it, because there are serious positives and serious negatives of this way of investing, and it's certainly not for everyone, right? And so I walk people through the pros and cons and try and be, unbiased. I enjoy real estate investing myself, but that's not. I don't think that's right for most people. I don't think most people would make good real estate investors, and so I think as a financial advisor, I don't need to work with every type of individual, right? I need to be very, very good at working with a specific type of individual. And if for anyone out there looking for a financial advisor, you don't want a generalist.
Makes
you want
total
somebody
sense.
who's very good at your particular situation, unless
Right.
you've got a very
Makes total sense.
general situation, right? It's just like anything. If you're doing something specialized, find somebody that specializes in your specific situation, and you're going to have better results.
Totally. With that said, we've talked a lot about the active aspect and people like to control. Are you doing anything, or what do you sort of put together and suggest more on a passive aspect within the alternative space for investors?
So I do like the alternative, the lending space, which you guys are in, and so it's tricky to me because you're using alternative investments to fill a spot that I don't think fits the characteristics of stocks, and I don't think they fit the characteristics of bonds, and so it's someplace that's alternative, right? Go figure.
Yep.
And so this is a completely different animal in the portfolio, but I think that you can provide a bit of yield, and there is a bit of risk specifically, especially depending on which types of alternatives you're looking at. But within the lending space, there is risk there, and so I don't consider that as safe as a good high quality bond. But the returns are better, or they can be anyway, right? Depending on the time period and the performance in that. And so I like them as a complement to a stock bond portfolio.
Totally. On something you said there, and this is one of the, we can kind of meld this into the conversation around the challenges that people have been seeing currently, is certainly a variety of different alternative lending carries additional risk above and beyond a high-grade corporate or a treasury or something of that nature, where you're backed by the taxing power of the United States within a treasury aspect. But the issue that a lot of investors are having in that space is you can't capture yield. Is that something that has been a growing concern within your clients' accounts of, well, where are we going to capture yield? How are we going to do this without extending too much risk? And both, I guess, has real estate really been one of your answers to that question in the last year or so? Or what else have you been suggesting from, an alternative yield standpoint without having to take massive undue risk and perhaps go out and buy nothing but high yield? The J and K ETF or something of that nature. If you can walk through how you've been sort of tackling that recent challenge that a lot of RIAs and investors have been facing for the last year or so.
Right. Well, and I would say that goes back a lot farther than a year here. I mean, ever since interest rates got low, which they've been low for a long time now, people have been talking about, well, once interest rates rise, that's going to be terrible for bonds, right? And I've heard that conversation for the last 5, 6, 7 years. However, bonds have done quite well during that exact same time period that people were warning that they would do poorly.
Correct.
And so I think we've got to be careful not to predict the market too much, because typically when you do that, you predict it wrong. At least that's what history shows us. When we try and predict the market, you do it wrong. So how do you put yourself in a position that you'll be okay no matter what, right? And so I think that's the biggest thing that we have to solve for, is figure out what the time frame of the investor is. What is this money for? Are we taking retirement distributions to live off of? How much do we need, and for how long of a time period? And to have a specific dollar amount that we have in things that are safer, and spread that out globally amongst bonds. And so we have some bonds within the United States that are on the shorter term side of things. We have some bonds in the United States that are in the corporate and the mid-term side of things. And then we have global bonds, and have a solid position in bonds. But really with bonds, try not to have more than you need in bonds, and have the remaining amount in more growth-oriented investments like stocks or alternatives or real estate. And then real estate does offer terrific cash flow that can really help supplement a portfolio. Yeah.
Are there any other alternative platforms you use for any particular investors? I mean, I know it's sometimes when I was managing investors' money, you'd have something that, on one spectrum, it was very, very simple, plain vanilla, and you had others that, their demands were quite complex. Just curious of what other alternatives, if any, within your client base, you've seen sort of questions or people beginning to think about.
So one thing that we do most often is just with hard money lending. And so there's local hard money guys in town that do really good work. And so we'll have a portion of not necessarily your short-term needs, but have some good yield that comes in with a hard money lender. A lot of times it's similar to what you guys are doing, just with smaller properties for the most part. And so that's been a good addition to client portfolios. And then too, if they are in more of a growth and income phase, we've even used some arbitrage in that we've used collateralized lending in order to access additional funds and do some investing through that. So basically you borrow money against your portfolio. Don't go nuts, because this is an extremely risky thing, and don't put it into something that's risky. But if you take 10% of a portfolio on margin and put it into a hard money type investment, you can get some good returns without taking undue risk, and without sacrificing what the portfolio would be doing otherwise. And so we've taken that approach, and that's been.
I'm pretty amazed that, Scott. That's great out of the box.
The other thing.
Other RAAs.
Yeah, and that's one of the nice things about working with a specific investor profile, because I think for most individuals, for your normal average Joe retiree, collateralized lending is probably a terrible idea, and that's why most advisors stay away from it and say it's a terrible idea, because they're right most of the time. But for this specific subset of investors, it's not a terrible idea, and in fact it works quite well, and it's something that they understand, because we're used to borrowing money and we're used to lending money, and so they get just the interest rate spread and the risks, and so it works wonderfully to just kind of juice a portfolio a little bit without without leaving extra money on the table and without taking undue risk. The other thing that clients are interested in a lot of times is getting into investment syndications, right? And so these are groups of usually there's some general partners and some limited partners. The general partners come up with a deal, provide find the loan, figure out how to manage it, do the actual deal, and then they raise money from limited partners. Limited partners provide the funds for these, and so those can be a good investment, but they're extremely high risk. And one of the things in the alternative space that I always caution people about is just the lack of regulatory oversight on specific things, right? And so a lot of times these are just available to accredited investors, and the reason for that is not because they're amazing investments, it's because they're high-risk investments, right? And so it doesn't mean they're bad, but it means you should do your due diligence and be willing to ask uncomfortable questions, right? Who's auditing this? Do you have any oversight? Which regulatory authorities are you dealing with, and what does that look like? What are you doing to protect my data and my investment? And so those are complicated to deal with. They can be good, but it's something that I always caution people from getting too heavy into.
Definitely. Well, I had some just listening to what you were saying, and I was going to recite a couple points that you had, sort of sum up some of the things you'd said and see if there's anything else you want to add to this list. But you had sort of said that investors, especially with regards to alternatives, should focus on something they enjoy and they like and they're passionate about, so they have a great deal of understanding, and especially if it's going to be an active investment. Work with a knowledgeable advisor. Find that advisor that's going to specifically understand, what you want to do as an investor. Really understand the risks involved in anything alternative. Understand what it takes to actively manage a portfolio, or if you're going to invest in a fund, understand the risks that are inherent in that investment. And then lastly, what you were just talking about was that transparency and oversight. Work with, whether it be your advisor or a fund or somebody else, a partner, make sure you have the transparency and that you have, that oversight to, protect your investment. Is there anything else that you would want to mention as sort of like, hey, this is what we really focus on for your clients? I mean, additional points?
Yeah, I'd say there's two other points of clarification. One is it's okay to start small, right? Most firms or most of these investments have a minimum. There's no need to invest more than the minimum, right? Give it a shot, give it a couple of years and see how comfortable you are with this particular firm. Sometimes firms are better at raising money than they are at managing properties, right? And you don't know that until you've dealt with them for even a full cycle. Like a lot of times a syndication deal, it's a 5 to 10 year project, and really you should work with them for a good 5 to 10 years, go full cycle through the project, maybe before investing more than the minimum. Or at least getting a couple years under your belt with these to see how this investment sponsor performs, how they communicate, how they manage in things like COVID, in good times and bad. And so spread your money out, start small. And then the other thing is to just realize to match up the time frame of the investment with your time frame, right? And so if this is an investment that you might need some of this money back within the next 5 years, and this is an illiquid investment that you can't get the money, well, it doesn't matter how good the investment is, it's the wrong investment for you, right? Because this investment doesn't provide you the liquidity that you need. But maybe if you need the money in 2 years and there's a 2-year liquidity event or something that happens, maybe this is the right investment. And so much of my work, and I think much of anyone who's helping somebody invest work, is to just match the time frame with the investor, right? So that the funds are there when you need it, and if you don't need it, then it's all right for them to be locked up as long as you're earning, an investment.
Yeah, I call that an asset liability mismatch. Don't for any investors listening to this, don't feel bad if mistakes happen. Even at the most professional level, I have seen tons of professionals mismatch assets and liabilities within a complex portfolio. All of a sudden they need liquidity and it's not there. And that's what creates some catastrophic problems. So that's a very important point. And I would actually say most of people's losses and stress, even in the '08 period, was due to asset liability mismatch. They went into things that had 5-year terms and turned around and needed the money in a year. That's not going to work. So yeah, that's a good point of advice. Well, last question I had, which is kind of a little different, was, some of the people might want to understand. You're doing some pretty esoteric stuff outside of the normal of portfolio construction and traditional investments. How do you structure that for yourself as part of your business? I mean, you're taking particular time in helping educate these people, helping them find investments, helping them manage those things. As you as part of your business, I mean, it's like, well, how does that fit? So perhaps other RIAs out there can better understand well, wait, if he pulled it off and he did it, and this is how he thinks about structuring it within his business to make it, feasible for his financial advisor practice, it's something that they could think about as well.
Yeah, and I know. So this is pretty unusual. What I do, right? And so most financial advisors don't work well with real estate investors. At least they don't help with the real estate side of things, which to a lot of real estate investors, real estate is the main thing. So they're not helping with the main thing. Yeah, that's not as good as it could be. And so my advice to an advisor who's doing this is that you just have to be a little bit out of the box. Price your services with the value you provide, not so much the assets that you're managing, but with the overall situation and the value that you can provide. And the value that you can provide to real estate investors is absolutely tremendous. Helping somebody to put the overall picture together. You can save someone hundreds of thousands of dollars in taxes over the long term. Make sure that they have the asset and liability matching, like Chris was mentioning, and so they don't get themselves in a hard situation and they have to sell things at the wrong time. Like, that value is just incredible. And so charge based on your value, not necessarily based on what they have just in stocks and bonds. And do good work. I mean, the things that you can do for a real estate investor, just helping them, have a good sounding board, understanding what a client is investing in, and give them a good unbiased opinion. Offer them some accountability and oversight with their stock market portfolio and the real estate portfolio. Determine what the effects of leverage are on their portfolio. Try and help them determine what's the optimal amount of leverage. How do you manage, fixed versus variable rates of interest rates? Have a good professional network: CPAs, attorneys, qualified intermediaries, alternative investment folks, and just have a good base of knowledge to help with. And there's just it's a blast. And the reception I've gotten from real estate investors has been fantastic. There's definitely a need to it. In fact, there's another advisor in New Jersey who does similar to what I do, and we've started a real estate study group amongst financial advisors, and we started it about a year ago, and we're all up to a little over 45 members, and we just get together monthly and talk real estate and how can we help real estate clients. And so I do think this thing is going to become more popular within the financial advisor space, which I think is hugely beneficial for real estate investors overall. And so and I've said this before, but it's finding somebody who works within your specialty, right? And so if you're a real estate investor, find a CPA that works with real estate investors, a mortgage person, a broker, just people that work in your specific situation.
I think that's some great advice, Scott, for other RIAs, especially those that are just getting started and they're wondering how in the world they're going to get those new clients, what they're going to specialize in, because they're such generalists that it's really difficult. So taking a specific alt like real estate is great. Maybe crypto is another one. Whatever it is that you have some enjoyment in, and really going after deep into that area, I can see how you would much easier pick up clients in that area because they begin to trust you because you build that knowledge that no other RIA has, or very few do. So great advice.
Exactly.
Right.
Great advice.
And it works wonderfully if you take a one-off situation, right? And so you've got, let's say, clergy, for example, right? Pastors. There's all sorts of unique tax situations and opportunities and pitfalls of pastors. And for a normal financial advisor to do a really good job for a pastor is kind of difficult because they're probably not your highest, paying client, but they're one of your more complex clients. And so it's hard to service them well. But if you just have a practice where all you do is work with pastors, you can do a great job at a reasonable price for somebody.
That's great.
And it works for just about any
so
specialty.
Moving on to something a little more beyond RIA stuff. What, we're all busy all the time with our professional lives, but what things would you really do more of, but you don't really have time for?
Yeah, and so, tax time is over, and so tax time is a real busy time for me, and so it's good to be on the other side of that. Really, family time. I mentioned I got 3 kids, 3 girls, and we spend a lot of time together, and I'm looking forward to spending a lot more time here once my schedule calms down a bit, and so looking forward to going up northern Minnesota, doing some hiking, walking around in the woods, and different things at Airbnb. I love
That sounds great.
Airbnb. Getting a cabin on the lake and just hanging out with,
Nice.
with family or friends,
Nice.
and then doing
And
some traveling.
lastly,
Doing some traveling is
what
always
new belief, behaviors, or habits that you've adopted within the last 5 years have most positively impacted your life?
So 5 years makes it kind of tricky, but I think the biggest thing is to just be continually learning, right? And I didn't start this 5 years ago, so I'm sort of cheating on the question. But always,
Right.
always learning, right? And so if you find somebody and they're trying to teach you something, trying not to be critical of what they're saying, and maybe if you disagree with 99% of what somebody's saying, well, is there 1% that you could learn from that individual? How can what they're saying be applied to your situation or the situation to somebody and so just always learning, and then too understanding that the world isn't a world of scarcity, and that there's plenty of people to help, right? And there's plenty of people who want help with their planning and their investments. And so the work that you guys do and the work that I do.
Yep. That's great advice, Scott.
There's just a lot
Always
of
be
people
learning.
who could benefit.
I find it a lot of fun just having these interviews or even interviews with new investors, and you learn how they made their money, their specific profession. It's always fascinating. And then I'm sure for you, as you learn even from real estate investors, and that gets back input to you, and that gets back output to other real estate investors that you're working with, clients. So, man, that's really a key for professional success in your business is that I'm always ready to learn something from somebody. That's great advice, Scott. Well, Scott, it's been a lot of fun talking to you about this business,
Yes.
and I hope that our guests are going to come away with some really important, whether you're an investor, whether you're another RIA. I think there's some incredible nuggets here around diving in, considering your first investment, or as a new RIA, how to really be successful in this business. And Scott really is a picture perfect example of how to do well as an RIA and do good for people, which is great. So thank you so much for interviewing with us, Scott, and great luck in the future. And thanks to everybody out there listening to us.
Yeah, thanks.
Scott.
I definitely enjoyed the podcast or in the interview. Thanks for having me.
Thank you.